Good evening, everyone, and a warm welcome to our post-earnings conference call for the quarter ended June 30, 2019. I have with me on call Mr. Vijay Kumar, our CFO, and Stellar IR Advisors, our investor relations advisor. We hope that you all have received our first quarter FY20 result update presentation and have gone through the same. We have also uploaded it on the stock exchanges and the company's website for your reference. We will begin the call with a brief summary on the company's business performance during the quarter gone by and key updates, followed by the question and answer session. Now, as far as the past quarter, that is Q1FY20 is concerned, our capacity utilization improved more towards the second half of the quarter, and we were able to clock sales volume of 3,609 metric tons, which was just marginally lower than 3,680 metric tons sold in the same period of last year, that is Q1FY19. When compared sequentially, the volumes sold were 40% higher. However, that is to be attributed to factors like seasonality and low base of Q4FY19 due to demand slowdown in second half of FY19. The average realization in rupee terms too remained largely stable as the fall in shrimp prices in dollar terms was more or less compensated by depreciating value of the Indian rupee on a year-on-year basis. Consequently, the net revenue before export incentives was just a tad bit lower by almost 2% year-on-year in the first quarter of FY20. However, the total revenue in the first quarter of FY20 was about 7% lower year-on-year due to a one-time refund of anti-dumping duty of around rupees 11 crores in the corresponding quarter of last year. Now, despite a flat top line year-on-year, the profitability dropped due to higher raw material cost. While the shrimp demand showed initial signs of revival, the raw shrimp supply constraint continued in the past quarter and still remains, thereby leading to procurement of raw material at a relatively higher price. While other costs were well contained, the impact of raw material cost dented our profit margins both on EBITDA levels and PAT levels in Q1 of FY20. Going forward, and as we enter the pre-holiday season, while we expect the demand to sustain in the coming quarters, we are also cautiously optimistic about the supply scenario in India. As also mentioned in the previous calls, the first crop of shrimp aquaculture in Andhra Pradesh was delayed due to climatic conditions which created a shortage of raw material raw shrimp, and especially for the sizes required by the company. Now the producers have stocked in the months of June and July, and the harvest is expected to begin from September-October with some minor losses due to the recent flood situations. The producers seem to be fairly optimistic about the upcoming crop subject to climatic conditions and incidence of diseases, as the market has very well improved compared to last year. With that and our new facility coming on stream soon, we look forward to enhancing our overall performance. Our new processing plant is ready for trial production, which we expect to begin in the current month. The commercial production will commence after receiving certain regulatory approvals and certifications. The total capex incurred on the new facility is around rupees 108 crores as of July 2019, which was funded by IPO proceeds and a small portion of internal accruals. The total installed capacity would be 20,000 metric tons per annum, of which 5,000 metric tons per annum would be towards a more value-added product category, that is ready-to-eat products. In terms of market diversification, we continue to explore newer markets and have also forayed into China, although its contribution in our geographical mix is still minuscule. In the last quarter, in the first quarter of Q1 of FY20, almost 89% of our total sales was to the USA, about 10% to EU, and remaining close to 1% to China. The share of the EU market has fallen due to the weakened demand from that market. That is largely on our business and industry updates. We continue to focus on optimally utilizing our capacities and strive to reduce costs through backward integration and value addition to product offering. That is all from my side. I will now hand over the line to our CFO, Mr. Vijay Kumar, to brief you on the financial performance for the quarter ended June 2019. Post that, we would be happy to take the question and answer session. Over to you, Vijay.
Good evening, everybody. I am hereby presenting you the highlights of last quarter ended June 2019. The company reported total income, including net revenue and other income of rupees 226 crores as against rupees 244 crores in the same period of last fiscal, which included the one-time net refund of close to rupees 11 crores. The same stood at rupees 167 crores in Q4 FY19. The volume sold in Q1 FY20 stood at 3,609 metric tons, marginally lower than 2,680 metric tons sold last year in Q1 FY19.
Sorry to interrupt, Mr. Kumar?
Yes?
Sir, your voice is not sounding clear to us.
Is it now okay?
No, sir, it's still sounding unclear.
Just a moment.
Sir, I'll request you to use the handset mode while speaking.
Is it now okay? And almost, hello?
Yes, sir.
Is it okay?
Sir, a little better.
Okay. And almost 38% higher than 2,616 metric tons sold in Q4 FY19, which is on account of the seasonal factor. As also explained Mr. Chaudhary earlier, the average realization in Q1 FY20 came in at rupees 626 per kg versus rupees 663 per kg in Q1 FY19, which included the one-time income. At the EBITDA level, the company reported rupees 16.4 crores as compared with rupees 37.1 crores in the same period of last fiscal. On an adjustment basis, the comparable EBITDA margin contracted to 7.3% in Q1 FY20 versus around 11.2% in Q1 FY19, marginally on account of higher raw material costs. Profit after tax stood at rupees 8.3 crores as compared with rupees 21.2 crores in the same period of last fiscal and rupees 8.4 crores in Q4 FY19. That is all from our side. I would now request the moderator to open the call for question and answer. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Praveen Sahai from Edelweiss. Please go ahead.
Yeah, thank you for taking my question. The first on, as you had already mentioned that the higher raw material prices impacted your margin. So how much is on farm gate prices last quarter?
Sorry, hello?
Hello?
Yeah?
Yeah, how is the farm gate prices last quarter, sir?
The last quarter average farm gate prices was yeah, 1 minute, please. Sorry. The average raw material price was That was 307 rupees average raw material price for the first quarter of current financial year.
Okay. So versus last year of same quarter 300, this time 307. Right, sir?
Yeah.
And how much is the capacity right now? That's 15,240 metric ton right now.
For now, right now it is 15,240 metric tons.
Yeah. Is there any ready to eat or ready to cook in that?
There's only ready to cook. There's no ready to eat in the current format. Now, from this quarter onwards, once the new facility starts, we will also have the ready to eat.
Yeah. And just to, as your competition has also reported the numbers in the processing business, and they have not given such a large deterioration in their margin as compared to you. So what's the difference between you and the competition? Like, because their margin has seen the improvement.
I wouldn't much comment on the competition's performance as such, but given with regard to our company, we have been emphasizing very much over the past 2 quarters, almost more than 2 quarters, that we have had pending contracts even though we had pending contracts, we couldn't execute them because of lack of availability of raw material in specific sizes which were required to execute those orders. And hence, we had to close all those orders in the first quarter predominantly and a little bit into the second quarter, but most of it has been closed in the first quarter. Thereby, in order to procure that raw material of those sizes, we had to pay higher prices, in fact, because of the shortage of supply, and we had to get those done. Naturally, when such a scenario where we have relatively lower selling price of the previous contracts, which is being executed with a relatively higher purchase price because of the lack of availability or lack of supply of those sizes, that definitely has an impact on the margin. That is on one front. Second point is our capacity utilization. Of course, even though overall it looks good, pretty much flat, similar to last year, but major issue is the new facility adding up to our business also would have a significant impact. Definitely, we look forward now, once this is coming up in this month, we look forward for its utilization, not only in ready to cook, but also ready to eat is a significant value addition, even on the realization part. So we are looking forward for that.
So that's the new capacity will be operational from this quarter?
It's right now the trial production is starting this month. So most likely we believe we will be able to start the commercial production also before the end of this quarter. To be precise, in a straight line, we should see the impact on the commercial terms, we should be able to see the impact on revenue as well as profitability for the second half of the financial year. But of course, subject to the conditions of the supply, which this year in India, which we have also emphasized in the previous quarter Concall that the supply scenario in the current year was a little bit bleak compared to last year, and we expect some supply reduction. But yes, the utilization of the new facility which is more efficient because with its state-of-the-art technology there and also ready-to-eat capability, we look forward for a better performance from the second half of the current financial year, once that is fully effective. For sure. So that's that. Yeah.
All right. And any MEIS benefit this time in the sales?
There was. It's only in the second quarter that it's in the current quarter the MEIS has been reduced, actually.
Okay.
It's from 7% to 5%. It is effective in the second quarter. So, but as we have also mentioned in the previous con calls that increase of the margins on a per kg basis, independent of the incentives being provided by the Government of India, is the ultimate goal, and for which exploring newer markets along with value-added products, both in ready-to-eat as well as ready-to-cook, will definitely help us. So now once we are out of those old contracts which we had last year, we look forward that irrelevant of the existence of MEIS, we'll definitely be able to.
Okay, so your old contracts has been over, so the way forward we'll see improvement in the margin with this.
Sorry, please repeat again.
Yeah, so I'm saying that your old contracts are over, for which you are taken on a hit in this quarter. So the way forward we'll see an improvement in the margin.
Definitely, yes, definitely, because we look forward for that because we have totally, as such, our company is not into reneging or renegotiation, and we do maintain a good relationships with our customers, and we have completed all those pending contracts of last year, which definitely is a good thing for us because we are in the real-time market scenario, and now we can look forward to utilizing the current available supply of the present year for the orders of the present market. Yeah, definitely that's an added advantage for the business.
So how is your contracts are? Because if the unavailability of the shrimps impacted your business the last quarter and your order, so how is in a contract whenever you go forward to, or in a year or for a long-term contract? How is that so that you can procure in the prior and make some good margin? So how is that exactly?
One important point with regard to the contracts is last year there was a significant lack of supply in some certain specific sizes which were available, which were supposed to be available for us last year. Unfortunately, those contracts which were dependent on those sizes got affected, and hence we have balanced. Post that, we have balanced the contracts for the sizes not so that our concentration is not specific into any of the sizes which can impact our margins. So we have made those changes, and now since we have already been telling that we'll be looking into value-added products, we believe they will be helping us eventually from this quarter and next quarter onwards.
And regarding your geographical mix, the way forward we'll see the same, contribution like 10% of the UK and some single from the China. Majority.
The 10% was in European Union. The 10% actually it was almost 25% in FY18. By the end of FY18, major impact being in FY19, once the prices have got corrected, there was marginal improvement. But then once the farmers' supply has reduced in the current year and the prices started firming up, the EU market demand was not on par like it was in the past. And hence we expect things to be changing, and definitely we want to increase the 10% to EU to maintain it to 20 to 25%. Apart from that, we just started with a very insignificant business to China at hardly at 1%, but we are looking forward to increase it to anywhere between 5 to 10%, but in non-commodity items. Not in commodity, but non-commodity items we would like to increase.
So nothing, worrying in the EU market, basically for India. Is there some incidents happened, or is just a demand slowdown?
In the present year, it was demand short of demand, number one. Number two, because the pricing which was coming out of EU was not on par with the rest of the markets for the specific products. But of course, added to that, we should see from next year how things make way for like an FTA free trade agreement for Vietnam, or with Vietnam which EU had. We should see how that would be. But we also discussed with our customers, and the customers still value Indian product. I'm not saying Apex alone, but Indian product because of better quality. So that's what they have informed us, that they will continue to be doing business with India on the raw product especially. So on the cooked, we should see how things evolve between Vietnam and India. But otherwise, we definitely hope that we can increase the business mix, and we believe we will be able to do it because we have our customers supporting us for the quality product which we supply.
Okay. Great, sir. Thank you for taking my questions.
Thank you.
All the best.
Yes, thank you.
Thank you. The next question is on the line of Deepesh Kashyap from Equirus Securities. Please go ahead.
Yeah, hi sir. So to begin with, can you please tell me the export incentive benefits in this particular quarter, please?
Yeah. The export incentive benefit was $15 crores, sorry.
15 crores.
Around approximately 15, 15, yeah.
So that is 7%, right? 7% of your exports, the benefits came 7%,
yeah. Yeah.
So,
remember that the duty back, yeah, sorry, go ahead, sorry.
So the MEIS benefits are going to end in March 2020, and the talks that this may not get renewed. So how do you think this will pan out? Will the government give any benefits to compensate this thing?
The government has not has specifically mentioned that they are looking at alternative measures in supporting the sectors, especially labor-intensive sectors or employment-providing sectors, manufacturing industries. And they did mention that they would look at, which they're already having consultations with various trade bodies, including ours, about alternative measures or alternative schemes which are WTO compliant. So that's the key focus was that they would have schemes to support the sectors in the present scenario of the trade in such a manner that they are not affecting any WTO norms, and that was the whole reason they have mentioned that we are looking at. They also already started discussing about freight assistance and some other measures which were by replacing MEIS. It was not that they were going to do away with the MEIS as such. They will do away with that scheme, but they are planned for the replacement measures. That's what they have mentioned.
Okay. Sir, you also mentioned to the previous caller that the MEIS benefit have reduced from 7% to 5% from second quarter. Is that correct?
Yeah, in the middle of second quarter. Yeah, from June, in the current quarter, correct.
Is there any specific reason for that? Because I thought this is valid till March 2020, right? So why did they reduce in between?
No, actually, I'll be very straight with you. It was the MEIS went from 5 to 7 just around a year ago, if you remember correctly, around a year. That was a temporary measure which was provided, and that was again withdrawn. But the duty drawback still, the MEIS at 5% and duty drawback which has been there is still continuing, whatever has been there prior to last year. It's only last year, just around approximately around 16 to 18 months, they have given this additional 2%, which was supposed to be withdrawn by March, but they notified in June that they will be withdrawing from June end.
Okay, understood. And so recently Vietnam has signed that FTA agreement with the EU. So how this is expected to change the trade balance with India, and how specifically it is going to hurt our exports? Because last year, as you mentioned, 25% of our exports went to EU. So how do you think it will change the scenario?
Deepesh, the first thing is our business of coming down from 25% to 10% to EU in the first quarter of FY20 has nothing to do with the FTA of Vietnam or any enhanced buying out of Vietnam as such. In general, the pricing was lesser, most important point for the first quarter. Now when it comes to the original business of 25% with the EU, we still believe we will be able to continue that, maintain that, because as such, the buying has been good. It's been, means the quantities are being bought, but they are not able to give the market prices which were prevailing in other countries. Now, the FTA with Vietnam is most likely to be effective later this year or from the start of next year, which has been signed in the month of June, is, of course, definitely there would be, I would believe there would be certain impact on the cooked product, which has a 7% duty, while on the raw product, 4.2% duty, which is existing. We have spoken to several customers and they all believe that they are going to continue to buy from India irrelevant of that, because the quality of the Indian product is definitely higher. That's the feedback we got from customers. They believe in the quality of the Indian product. When it came to the cooked product, because of 7% difference, there could be some iteration to buying more from Vietnam. Apart from all this, India has also been in the talks for an FTA with the EU for the past, I think, 5 to 6 years. So we should see how those measures will be coming up and how they will be producing results. If you see, even in the FTA with Vietnam, it started way back in 2012. Almost more than it's more than a 7-year story since, and finally it got concluded just last month. On June 30th. So similar case, India has also been discussing about FTA for more than 5 years. So that's more of a government-to-government consultation process which has been going on in their talks. We should see how that would be, how that would move forward. And definitely, if that is there, we will also be on par at the same level, and there should be an issue. Because especially we have an added advantage of India having a better added advantage of supplying quality products.
Okay, but still 4% difference will be there in the pricing, so that might put the pressure on pricing.
4.2% will be there. That is true. That is true. That difference will be there.
Sure. And so lastly, sir, you said like the procurement cost in this quarter was 307 rupees per kg versus vis-a-vis the last year it was 300 rupees. So I don't think there's a much difference in the procurement cost, and overall your average realization is also similar to last year. So why did the margins came down so much in this particular quarter?
But our volume also has increased significantly. I'll just give you our detail about how much volume we had actually done. We have actually sourced. This year we have sourced almost 4,654 metric tons.
4,600?
So vis-a-vis 54 metric tons.
Okay.
Vis-a-vis 4,400 metric tons of last year. So this,
why is that?
course,
because the sales are similar.
No, we have been telling mainly the volume is at a higher level because of to fulfill those pending contracts which we have been discussing for almost 2 quarters mostly, saying we had those pending contracts for which the sizes were not available. So definitely to finish them, of course, the Q1 volume was on a higher side, which was buying the product at a higher price compared to last year. But at the same time, it was the sale price, the realization price was very less. Compared to the present quarter. So because we are done now with those contracts, we'll be on par with the market condition as such.
Okay. And so out of the 100 crore that you spent on this new plant, how much was on land and the civil works?
I 1 minute. I also need to just correct this. I think one of you has mentioned 300 rupees as last year's raw material.
Yeah.
I think there was some mistake there. I need to correct this on this call. It was 269 rupees. Last year's first quarter average price was.
269.
Yeah, it was 269 rupees for last year first quarter.
So that was your average blended price, right? But the procurement cost was, I think, 300 rupees only. That's what you told. So 300 rupees was the procurement cost, and your blended price, because you do your own farms also.
Right.
So the procurement cost is 300 rupees, right?
Correct.
So this year it is 307. So that is a right comparison, right?
307. This year also it was a blended. So that is correct. Yeah.
Sure. Sir, about the capex thing that you said, like around 100 crore capex. So how much was on the land and civil works?
The land alone would be around was around 1 minute. It was around 8 crores. 7, no? 7 crores. And the civil works for a check.
Mr. Kashyap, are you done with the question?
No, I'm just waiting for the answer.
He's still waiting for the answer. Civil works are the information. What you said, Larry? Wait it in a bit. Just meanwhile, we'll take the next question. I'll provide you that answer. Meanwhile, yeah.
So last question is basically, so your employee cost and other expenses has fallen very drastically in this particular quarter. Now, like whenever a new plant is going to start, like generally the employee cost increases upfront, but the employee cost has actually fallen. So I just wanted to know the reason why it has been so.
So one of the most main point was that, in fact, no employees have been retrenched or anything, but it was more to do with the employee-employer insurance cost which was there. That cost was pre-period and post-period that was adjusted by the auditors. That's the reason it shows to be lesser. But otherwise, it will not be. It's for the first quarter because of the adjustment of the insurance premium payments which were there. So it's not as such. We have not had any reduction.
The employees that we have added, the employees that we have added for the new plant that have already been in the last quarter numbers, right? 12 crore for the quarter. So the new employees have already been added, or we still need to add more?
Part of them have been added. They are working in the leased premises outside, and they are all going to be transferred. Added to that, a little marginal increase will be there, and newer employees which is actually being taken up right now as we speak.
Sure. Okay, so John back.
I'll get back to you on the civil concession.
Sure.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Shalini Gupta from Quantum Securities. Please go ahead.
Yeah, good evening, sir. I just wanted to check about the contracts, the contracts that you sign. So they are fixed price contracts, is it?
They will be, Ms. Shalini, the contracts will be fixed price contracts.
Okay, and so this is for a year your prices are fixed?
Not really. We have different contracts where we also take on a monthly basis. Some are on quarterly, some are 6 months basis. Now, in this specific case, which we have been emphasizing about not able to fulfill certain contracts in the late second half of last year, and it just got carried over. It was more with extensions being provided by the customers to get those contracts out as and when the raw material supply is available. So it's not that it is an annual contract. As on date, we have not signed any annual contracts, but those contracts got extended so that they also waited for the supply, and we also have been waiting for supply to pick up, which had happened in the first quarter.
Okay, so sir, like the kind of contracts that require. No, so before that, sir, I just want to check. Like, do you get are you able to generally pass on the cost increase, or do you have to absorb it? How does it go?
The cost increase in general it would be passed on. Of course, when there is a cost increase, when you mean to say when the supply is less, for example,
yeah,
if you see the first quarter supply has been less, so naturally the prices have picked up, and accordingly the sales prices also have been increasing because of the lack of supply. So the cost increase also would be passed on. At the same time, if there is a reduction in the sale price, that will also be passed on vice versa to the supplier base. You understand what it's
Yeah, I
it's a demand supply. It's a demand supply.
Mm-hmm. So, I mean, let's say that you have a quarterly contract and cost increases during the quarter. So, at the end of the quarter, when you go to renew your contract, at that time you are able to fully pass on the cost increase.
Naturally. No, even for example, we take a 3 months contract or a 6 months contract, and if the supply prices increase, naturally we will be discussing on a new sales based on a new pricing.
Okay. And sir, like I just wanted to understand, like so, sir, last quarter, last year as well as this year, there was a supply constraint. So now, how do we know that this? What's the situation on the supply front going forward?
See, the current in the first quarter, basically there were premature harvests which were done in the month of April, last month of last quarter, which was in March and April, in smaller sizes, and added to that, because the pricing was quite low in the last financial year, the farmers were waiting for the market to improve, and so that they could stock shrimp again into their ponds, which made them to wait for at least 1 to 2 months minimum. Thereby, they started stocking, which I also mentioned in the opening remarks, that they have started stocking again in the month of June and July. And we did mention in our previous Concall also that if the second crop stocking, which started in June and July, if it survives and sustains, we are really looking forward for a good output as such, because a lot of these farms have been dried up, and the measures required to be taken for starting a new crop have been fully implemented by these farmers. They are very much enthusiastic with the prices which are there in today's market, which is attractive for them, and they are looking forward for stocking more of the area. But end of the day, we also have climatic conditions which also could have certain impacts on some of the areas. For example, some areas could have had effect because of certain flood situation, but that doesn't really may have an impact on the overall Indian supply scenario, but it is specific areas which may get affected. But of course, the farmers who got affected also are again restocking again with the seed. So as such, we look forward for a good supply in the second crop, as the stockings have started in June and July. It's also going on now as we speak. The supply has been improving. The stocking has been improving. So we look forward for some good supply starting from September, October onwards. And if all things go well, we should really have a good second crop, to be precise.
And sir, the US and the EU are two of your very big customers, and both are going up. No, not the US so much, but actually the EU is going through a major slowdown. So, in this scenario, do you expect EU to be able to accept higher prices, or you would have to reduce your prices in order to cater to the EU demand?
We, as I have mentioned, with regard to the EU market, apart from the FTA, which is with Vietnam, the Indian demand, the supply for the demand from the EU was a little bit slow in the first quarter, but the orders they are coming in. It's just that they were not able to pay the prices on par with other markets, so that's the reason where we had done more business with the US. But in general, apart from this free trade agreement with Vietnam, we don't really foresee a major issue because EU in general pays good price. Yes, they have stipulations, they have conditions for importing products where they would insist on certain testing of products, which we are prepared for, and we have been doing it for the past 4 or 5 years, with almost 3.5, 4 years. We have no issues at all. We have been continuing to supply to EU without having any blockades of our shipments because we ensure that the products are meeting their standards. So as such, our companies individually did not have any issues with regard to any business relationships with the EU customers getting affected. it's a different scenario. There are temporary slow periods during in the market, like for any other products. Otherwise, we don't really have any issues with EU. We need to see how things go once our new facility starts with the cooked product. Currently, our cooked product business is being forecasted mostly for the United States. We need to see how the European Union will accept it. So otherwise, for the raw product, we don't have any problem in the ready to cook. And also to increase the margins, and also to continue the business, we also are going to need to relook at the offering what we make with regard to the product types, and maybe we have already initiated certain products for the US market. We believe those new products will also have they have good takers in the EU.
Okay, sir. Thank you so much.
Thank you.
Thank you. The next question is on the line of Nitin Prasad from Invesco Mutual Fund. Please go ahead.
Yeah. Hi, sir.
Hi, Nitin.
The question is pertaining to dual challenges that we are facing right now. One is with regard to the demand offtake. In the background that our supplies are going to increase or our new capacities are going to come in. So we'll have to get it absorbed somewhere, either in US or in Europe. And second question is pertaining to the supply side in terms of raw material. Raw material are not currently available at relevant price. In that case, our spreads are not good enough for our profitability to be at the level that we have seen in past. How do we see things getting addressed on both these concerns?
Yeah, Nitin, first thing is on the capacity-wise, which you were referring to, and supply scenario in India. Mm-hmm. Supply in FY20 in India is going to be lesser than FY19 for sure. Okay, but the first crop did not really give the same amount of volume which was there available last year. So which, if you also remember, if you recall from the previous Concall where I had mentioned that we expect at least a minimum of around 100,000 metric tons to be lesser in the current year. So that is one part. That to answer your question about excessive supply to be absorbed and pushed into certain markets. So as such, the supply this year is not going to be on par with last year. But we definitely hope for the second crop to be successful because they have all had taken measures, and also we just hope that the climate supports, and if the second crop comes out good, definitely there will be a good supply, but definitely it will not be matching up of what it was last year, for sure. We all expect there will be a little bit shortage of supply from India. One of the major reasons for the price increase in the Q1 and onwards, price increase which was there between last year and this year, is also because of the supply shortage. There was because the supply as such was less and the demand was higher, and the customers were willing to pay higher prices and in order to meet their requirements, and accordingly the prices have moved up. So that is on the supply and the capacity as such. Now in our case, with regard to Apex, if you recall, we already have partial utilization of our new facility being done outside. So it's more of transfer of utilization of capacity from outside, from leased premises to own premises in the ready to cook. And in the ready to eat, it is totally a new capability for the company, but that is going to be accomplished much sooner than even the ready to cook. As we note from our customers in the US who are willing to take the majority of the ready to eat products, the cooked product from our company, which has been discussing already. And to be precise, they already started asking us for quotes, but we are just waiting for the trials to get over, and with the commercials we'll be starting that. That is about the supply and the capacity utilization. We are fine with our existing customers still absorbing these products, because they in general, everybody within the US and EU accept the Indian product to be of a good quality, and it has been maintained consistently. Of course, Apex is part of Indian product supply to global markets. That is on the front of supply and utilization, capacity and utilization. The second question you were mentioning about the pricing. Sorry, you were mentioning about the...
So I think both things are related. So one was with regard to the raw material prices which have gone up. So are we seeing a familiar or similar kind of response from the realization front in sales? I mean, are sales price going up?
See, as you know by now about the trade, it's all dealt with and deemed by demand-supply situation. Then the supply was less and the demand was higher. The realization prices were the ones which moved up in the north, and also moved the raw material supply prices also, raw material prices also to move up. So they move in tandem, even though there could be a bit of lag now and then, because it doesn't happen exactly in real time. So both of them have moved up. It's a different scenario that company specific. Each company could have old contracts or they could have new contracts. That makes certain differences, definitely, on a quarter-to-quarter basis. But yeah.
So during this quarter, had it not been the challenge of the previous contract which we were yet to run down, then what could have been the difference in terms of realization that you have fetched for the quarter?
The realization in present quarter would have been at least a minimum of 50 cents, minimum 50 to 60 cents per kg.
So roughly 20-25 rupees, or maybe around 30-35 rupees better per kg,
exactly,
as compared to what you otherwise have.
That would have been the case. That's as far as the realization is concerned. Remember, the costing also moved up in tandem to that, right?
Yeah. In this quarter, your cost has already gone up, but your realization was what you had earlier locked yourself into. So this time for the quarter, you got 50 cents lower?
Sorry?
So this time for the quarter, you got 50 cents lower than otherwise you would normally got, right?
No. We got high this year in the second, which you mean the first quarter, our realization would have been higher by 50 cents, yes, except for some of those contracts which were already locked. But there are other contracts which we still did get. But majority of it was the previous 2 quarters contracts, which was...
Got it. Can we now put a number to this quantity that we sold for the quarter? How much was pertaining to the previously locked contract, and how much was pertaining to the fresh realization that we have now started?
I'll have to get back to you on that. Separately.
And any rough split? Rough split will help, like 60-40, 50-50.
We can say around 65 to 35%. 65. Yeah, 65%.
Okay. 65 was of old price and 35 is pertaining to new price.
I wouldn't approximately. I don't have the exact thing, but I'll definitely get back to you on that. I'll give you the right one. Yeah.
Okay. And my second question was the new facilities that we are going to have, that is roughly 15,000 tons coming up. Roughly 5,000 may get swapped with our existing lease, and remaining 5,000 we may go for REET. So now we will be left with 5,000 which we have to deploy. Is this right understanding?
Out of 20,000, 5,000 is...
Oh, so we have 20,000 coming up, sorry. So
the new facility is 20,000.
So we have to now deploy
9,000.
Yeah. So now we have to deploy roughly around 9,000-10,000.
Correct.
Okay. And
being utilized already outside will get transferred, and 9,000 will be the remaining.
Okay. So now this 9,000 will be targeted towards which market? Europe,
it
US?
will continue to be the US and Europe and also Canada, which we look forward to do more volumes. Currently we are not able to do because of lack of capacity. We will be able to do that. But of course US and Europe will still continue to occupy the dominant space of the capacity.
Okay. And amongst these three markets, US, Europe and Canada, profitability wise, which is the best market right now?
See, it is different times are different. It depends on different times of the business, right? There are times where the EU was the most profitable, but that was not the scenario in the present year. The US has been more aggressive. So it's all purely supply demand scenario. So how that market's demands are, whether they are they are consuming or not. That's all. It depends on various reasons. It's not that all the time it is going to be the same. Traditionally, EU was always good. That's how we moved our business from 15% to 25%. If you recall the old results. This year it was different. Of course, we also had additional contracts which were pending for US, and apart from that, the overall demand was slow out of EU, and hence we had been focused more on the US market this year. But as such, we would definitely be diversifying more into EU and other markets, as we don't want to concentrate heavily. However, we will not disregard the fact that the United States is the largest importer of shrimp products in the world, in the formats which we want to do, that is in the value-added and high value realizing products.
Okay. And sir, last one, the new facility should get absorbed in 12 months' time, or it can take 24 months' time?
You mean an optimum utilization of around 75 to 80%? Is that what you're asking?
Yeah.
Max 18 to 24 months, max.
Okay. Yeah. Right. And this facility will have some extra cost in near term, and then it will get absorbed? The current cost rate that we are having, what kind of front loading of cost will first see, and then it will normalize for us?
So, I mean, front loading, you mean on the employee cost?
So any facility, once it starts, you have costs which are right now running, and then once you start commercializing it, the revenue starts at a later date. So right now, for next 3 to 4 months, we'll be having more of cost to get absorbed.
The most important point is we are not starting with either with from zero, which I have always been emphasizing. It is about starting from 6,001 metric tons. 6,000 tons is already placed there. Costs of up to 6,000 metric tons are already absorbed by the team which is there, by the business which is there. So this question pertaining to our new project may not be exactly the applicable.
Got it. Right, sir. Thank you.
Thank you.
Thank you. The next question is on the line of Deepesh Kashyap from Equirus Securities. Please go ahead.
Yeah, hi sir. Thanks for the follow-up, sir. Just wanted the clarity on other expenses. So this year your other expenses were 35 crore versus 45 crore last year. So what was the difference? Is there any one-off in this other expenses?
This year it was 35 crore. Sorry.
Last year it was 45 crores in the quarter, I'm saying.
The other expenses was it was actually 34. That was 34.95. Last year was
45.
It was 45. It has actually come down.
Yeah, come down. I'm asking the reason for that.
See, the thing is, in the other expense, earlier it was some of the employees who were there on casual, employees have all been brought into the roles. So one of the reasons, even though the employee, those costs were transferred in the grouping they have all been placed on the employee expenses because of the post-period, post and pre of the insurance premium treatments. You see an overall reduction in the employee cost, but that is only specific to this quarter. You will see that the employee cost is generally much higher. You understand? So in this case, the other expenses reduction was mostly pertaining to the casual employee who were on a weekly basis or daily basis who were brought back into
the difference cannot be 10 crores, right? Because the total employee cost was 10 crores and this other expense has come down by 10 crores. So I just wanted to know, is there any one-off or something like lower logistics cost because you procured from Andhra Pradesh only or something like that? Because 10 crores...
Actually, no. In fact, we procure even from other states, but that was not the only reason. That was not the only reason. 1 minute. Just wait. Let's see what that just trying to get the data. I'll get back to you again.
Sure, sir, I'll take it offline.
On two things. One, on that as well as on this. Both the things.
Sure, sir. So lastly, my question is, last year we sold around 13,000 metric tons of shrimps. So this year, like we were earlier guiding around 40% growth. But now that our plant the commercialization of the plant has delayed by one more quarter. So what is the target right now? Like, can we sell around 18,000 tons this year?
This year it is tricky. It's just not on the capacity availability for the company as such, as you have also been hearing for the past 2 to 3 months, since the last one quarter, that the supply scenario in this present year is little bit skeptical, as you can note, for various factors, various reasons. So we should see how things pave out, how the supply scenario would be there for the rest of the year. Of course, we are betting high on the second crop. The second crop means they only started stocking in June and July. Some of them got distressedly harvested. Some of them got flushed out because of some floods in some areas. It's not the case with the whole country, but we have to see how the supply will actually. The rest of the year in FY20 will be mostly based on the supply scenario rather than the demand. So,
understood,
because we have the capability, we have the capacity, and we have the business.
So regarding the value-added demand, like we have 5,000 tons of capacity coming up. So, like you must be knowing, like do we have a demand for that? Like, can we sell that entire capacity in this particular year, 5,000?
Majority of
so I'm saying like for the half, like can we do it like 2,000 this year? How is that?
Majority, we would be able to do majority of it.
Majority of that, right?
We have already, we can deal with the majority of it. So definitely it's more than half. Right. Of course, next year it will be completely done, because we are just waiting. Even the customers have been waiting for the capability to come into action.
Sure, understood. Okay, sir, all the best.
Okay. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. As there are no further questions, I now hand the conference over to Mr. Subramaniam Chaudhary for his closing comments.
Thank you, Lizanne. Thank you, everybody. We have concluded our Concall for the Q1FY20. For any further queries, please get in touch on the email at ir@apexfrozenfoods.com, and it can be you will be given the required answers on that. And in case of any further doubts, you can definitely contact on that email address. Thank you very much and have a good evening ahead.
Thank you.
Please subscribe and press the bell icon to never miss another update.